Hey everyone, it's Zack Beck. There are more reasons than ever to start filing your taxes now. The IRS is currently processing tax returns from the tax year of 2020 while still being backlogged from the previous tax year. Now, given the pandemic, there are some unique circumstances related to filing your taxes this year. Whether you received an economic impact payment, perhaps you received unemployment benefits, maybe you took an early distribution from your 401k or your Roth IRA, or perhaps you had a different sort of charitable deduction. Whatever the circumstance is for you, what I want to do in this video is break down in detail the unique elements associated with filing your taxes for the tax year of 2020 so you can maximize your refund and make sure that you take that money and invest it properly to help you achieve your long-term financial goals. So let's take our time, dive into the details, and jump into it right now. Alright, so the IRS is already predicting that there are going to be significant delays when it comes to processing returns this year. You might have experienced that last year during the heat of the pandemic when the IRS was delayed in processing refunds and issuing economic impact payments. For myself specifically, I didn't even receive the stimulus checks that I was owed, and it took almost 8 months for me to actually receive my tax refund. So you might have experienced something similarly. So how can we navigate that going into the tax year that we're filing for this year? And I would say the first and foremost, the most important thing that you or I can do is to file electronically and do everything possible with direct deposit. As I previously mentioned, the IRS was significantly backlogged when it came to processing returns this year. Because of the pandemic, they issued the same sort of work protocols as most people in the private sector did, whether that was social distancing, working remotely, or having people actually out sick due to the pandemic. So from that standpoint alone, the IRS was not as efficient as being able to process as normal, and as we know, the IRS generally isn't that efficient altogether. However, the one area where we can actually expedite the process is if we do our filing electronically and then have direct deposit. There are a couple approaches that you can take on this, but most importantly is that you have your bank account number and your routing number attributed to the IRS, so that once they issue your refund, they will be able to electronically distribute the funds to you immediately. And that is much different compared to when they're processing mail. They're processing millions of pieces of mail every single week, and they're only limited in their ability to be able to process that in comparison to doing things electronically. So if you have the financial means to do so, and you have the internet and you have everything else that you need in order to set up your account so we can link accordingly, I would highly recommend that you do so, because that will really expedite the process by which you receive your refund. On that note, you can actually provide account information for up to 3 accounts to the IRS for them to process your refund and send it directly to. You could do it for your checking account, your savings account. You could even have it attributed to your retirement account. So if you want that money not going into your bank account where you're tempted to spend it, but have it actually strategically go into your retirement account, you can actually do that. So that's a neat trick that you could actually apply right now, and that might even help you, encourage you to save a little bit more money long term. Last year, the federal government issued 2 stimulus payments directly to Americans. These were referred to as economic impact payments, the first being worth $1,200 and the second one being worth $600. Now, we have another proposal coming up right now here in 2021 where you might receive a check up to $1,400, but that will not be applicable in this year, in the 2020 tax year. The one thing that is good about this is that those economic impact payments do not count as normal income, so therefore you do not need to claim them on your tax return, so therefore you're not going to be paying taxes on them. So from that standpoint alone, rest assured that if you received and were fortunate enough to receive your stimulus payments last year, you will not have to pay taxes on those. Now, most Americans received those stimulus payments. However, there's still millions of Americans that were unable to receive them as well. So if you were in that circumstance and you did not receive a stimulus payment for $1,200 or $600, or perhaps you only received a partial stimulus payment, you have the ability to actually get a rebate on your tax return. Now, this is important to be aware of because you are due that money, and because you did not receive it, like I didn't receive it, you should make sure you claim this on your tax return. On that note, what you're going to look for is when you're filing your taxes, you want to make sure you fill out properly the recovery rebate credit. And this would be where you're going to say to the federal government that you did not receive your stimulus payment. And if you did not, what is going to happen is they're going to effectively issue you your stimulus payment as part of a refund. Now, one of the most popular programs that was put into place during the tax year of 2020 was the early retirement distribution from your accounts, such as a 401k, an IRA, or other retirement account. This allowed individuals to take up to $100,000 out of the retirement account without paying the early withdrawal penalty. Now, when it comes to taxes on this, the CARES Act stipulated that people are allowed to pay their taxes over the course of 3 years, or you can pay it all as one lump sum. Furthermore, what you could do is if you actually do not want to pay taxes on that early retirement distribution, you just basically contribute that money back into your account. Make sure that you do that over the course of 3 years, otherwise you will be hit with a tax bill. So for example, let's say that you took out $9,000 out of your retirement account. You could basically pay the taxes on that $9,000 in 3 different increments, pay the taxes on $3,000 in 2021, then $3,000 in 2022, and $3,000 in 2023, and make sure you're paying the taxes on that. Or you can make sure you recontribute that $9,000 back into your account and you're good to go as long as you do it within that 3-year time frame. When it comes to paying the taxes on your early distribution from your retirement account, the IRS created a new form. It's called the Form 8915E. So what I'll do is I'll put a link in the description for you to check that out, and it has more of the instructions associated with what you need to do in order to process your taxes properly when it comes to this. Among many things, one of the tragedies of the pandemic was how many people had to be unemployed or lost their jobs or were furloughed. Now, fortunately, unemployment benefits were ramped up so people could actually make ends meet by being able to pay their rent, get groceries, and keep a roof over their head, and hopefully heat their home or cool their home, depending upon what region of America they lived in. But when you consider that right now, if you had received unemployment benefits, maybe that extra $600 a week or the $400 a week, depending upon what state you lived in, it's going to be important that you're aware of that these are taxable in most instances. So you need to take that into consideration if when you took your money out and actually received your unemployment benefits, if you do not already automatically have a tax, you want to take that into consideration. And it's very unfortunate because if you received that money and you really needed to spend all of it in order to maintain all of your essential needs, you might be in a difficult position where you have to come up with more money to pay the government in this upcoming tax year. So just do your due diligence, do your research, but make sure that you understand that if you received any unemployment benefits in 2020, it's highly likely that those are going to be taxed and you're going to owe money back to the federal government. One of the interesting elements associated with the pandemic was it forced many people to consider various employment options, and gig work became very popular. That was already a trend that was transpiring in our economy, but it all the more accelerated in 2020 with people working for groups like Instacart or Uber, or maybe you did some other online sort of work yourself. So if you had some sort of a gig that provided you with more than $400 over the course of 2020, unfortunately, you're going to have to pay taxes on that. So you'll want to look for a 1099 form and make sure that you're filling that out properly with the IRS, because what you don't want to do is get in a situation where you're going to have to owe back taxes years down the line. So make sure you're just staying present on that, account for how much money you did receive, how those payments were processed, where you were getting your money from, and make sure that you don't put yourself in a financially challenging situation when it comes to the IRS. But just bear in mind that gig work is taxable. Now, when it comes to the 2020 tax brackets, there were some adjustments due to inflation. The first thing that you want to be aware of is the standard deduction for a single filer is $12,400. However, for someone who's a head of household, the standard deduction is actually $18,650, and for a couple filing jointly, it's $24,800. So those all increased due to inflation. So you want to make sure that if you're not going to itemize your deductions and you're just doing a standard deduction, those are the new categories you're going to have to operate with. So just bear in mind that there were some adjustments and generally some increases, which hopefully will help you deduct a few more dollars off of your overall tax that either you owe or that you're going to return, hopefully get a few more dollars on your refund. Now, when it relates to student loans, there's a provision that most people are not aware of, and that was that employers are allowed to contribute up to $5,250 to help pay down a student's debt. So if you had a student loan and your employer actually made that contribution to help pay down your debt, that is actually tax-free. But it's important to be aware of that this is only for the contributions that were made to your plan by your employer up until December 31st of 2020. So if they're starting to do so now, that is not going to be applicable in this tax year. But it's also good to know that employers were encouraged to help pay down the debt of their employees who had student loans, so they can be more financially free. And obviously the tax implications of having it be tax-free hopefully encouraged employers to do so. So if you're in that circumstance and you receive that, bear in mind that will be applicable for yourself. Now, if you have an IRA but didn't maximize your contributions to it during the course of 2020, there is some good news. You actually have an extension through April 15th, 2021 to maximize your contributions into your IRA and still receive the the tax deduction as related to that. So just so you're aware of, the maximum contribution that you can put into an IRA right now is $6,000. So if you only put in $4,000 through the course of 2020, you could still put the remaining $2,000 in between now and April and still have the tax deduction associated with that. So that's really something you might want to consider doing. Not only is it important for us to maximize our contributions to our IRAs so that way we're fortunate enough to have money down the line when we retire, but also the benefits tax-wise right now is something to bear in mind as well. Similarly, if you have a health savings plan, what's often referred to as an HSA, the similar provision applies. You have until April 15th, 2021 to contribute the maximum, which is $3,550 into an HSA during the course of your tax year of 2020 and still have it applicable to your tax return this year. So from that standpoint alone, that's another beneficial account to have for many reasons because there's triple tax advantages. Now, an essential step that you can take in order to maximize your tax return for 2020 and make sure the IRS likes you is if you file the like button for the YouTube algorithm. Now, I'm just kidding, but if you wouldn't mind liking this video, that would actually mean a lot to myself, and it's important for you as well. It doesn't cost you anything, and it doesn't encourage the IRS to do an audit for you. All you have to do is file it. So go for it when you have the chance to do so. Now, bear in mind that if you are curious about what your refund status is, the IRS does have an intuitive tool that you can actually plug in all of your information on and allows you to determine when they're going to process your return. In general, the IRS should process your return within 21 days when you file it. But as I previously mentioned, if you're doing this physically via mail, you might expect months and months and months before you're going to see that money that you're due. So take into consideration that if you have the ability to file electronically, once again, that is probably the best step that you can take in order to maximize your tax return and make sure that you're getting your refund as quickly as possible. Now, on the note of getting a tax refund, if you find that you're receiving an excessive tax refund, it might be something for you to consider how much money is being deducted out of your paychecks right now, because you might be having too much money taken out of your check. And if you get a large tax refund, in essence, what you're doing is giving a loan to the government. And I know the government has its own financial problems, but I'm not one to want to encourage them to take more of my money, because if you consider that if you had that few $1,000s that you were due for a refund sitting in an IRA or sitting in your 401k or sitting in a high interest savings account, that is going to be more beneficial than you receiving a refund in April and then immediately wanting to spend that money, or then taking that money and then investing it, because you want to have more time in the markets that way you can benefit from compound interest. So you just want to look at how much is being deducted out of your paychecks, consider what exemptions you're using. So just take that into consideration. On the flip side, if you find yourself having to owe a lot of money to the IRS this tax year, you might want to see if you're not having enough money taken out of your paycheck. So just try and get it right. Obviously, you need to do what's best for yourself. If also having a large tax refund is something that you have built into your overall system of expecting to have more of a windfall during the course of the year in the springtime, I'm not going to tell you need to change that. You need to do what's best for you. But oftentimes we have the psychological thinking that, oh, if I'm getting a lot of money from the IRS, that is good news. Technically, it's nice to get that money, but generally that is your money. That's why it's a tax refund. So you're due to have that money, and it's probably better for you to have it and not have to wait for the IRS to issue it to you, especially if you experience something like I experienced last year, where my tax refund was delayed by almost 8 months, and similarly other people as well. So you just want to make sure that you have everything strategically situated right now so you can make the most of your taxes, that we don't run into too many issues long term. Now, one thing I believe all of us are aware of is that filing taxes can be a bit stressful. I used to do this by myself when I'd print out the forms, I'd fill everything out hand by hand and actually try and do it myself, and then realizing that I wanted to find a more intuitive approach. Now, I actually use TurboTax, it's by Intuit, and it actually works very effectively. I'm not using this to promote them, I'm not financially affiliated with them or anything like that. I'm just telling you what I use. So if you sign up for something like TurboTax, you'll pay a small fee to have them process it, but it just intuitively walks you through step by step how you can move forward and actually file your tax returns. With all that being said, I'd like to thank you for watching the video today. If you wouldn't mind, please tap the like button for the YouTube algorithm. Help push this video to other people who might need to hear it. In addition, if you have any questions, please comment down below. I'd love to interact with you, get to know you, do any research on your behalf so I can help you make well-informed decisions moving forward. Furthermore, if you wouldn't mind, please subscribe to the channel. That would mean a lot to myself personally, as I do everything I can to create positive content that can make a positive impact in your life by encouraging you and myself to lead lives of meaning and purpose, all while maintaining balance and moderation. And if you do subscribe to the channel, please tap the notification bell. That will notify you every time I post a video, which I do on a weekly basis. Once again, I'd like to thank you for watching the video today. I hope you have a wonderful remainder of your day. Talk to you next time.